Welcome to China Events. I am Jason. The world's financial markets are taking the world by storm. Chinese officials have made 7 consecutive dumps, this time of $50 billion in U.S. Treasuries, and have increased their holdings of gold for 9 consecutive months. This news has caused great concern among global investors. As of early August, the balance of U.S. Treasury bonds has exceeded $32 trillion, a record high. And in just 2 months, since the U.S. government raised the debt ceiling in June this year, the U.S. has added $1.25 trillion in new debt. Without relying on the issuance of new debt, the United States can hardly survive. Just as the U.S. was preparing to issue $93 billion in new treasuries, China reduced its holdings of treasuries by $50 billion. China's total holdings of U.S. treasuries have dropped to $830 billion. This figure has forced the U.S. government to be wary because China's holdings of U.S. treasuries have been seen as a bellwether for global financial markets. Yellen, the U.S. Treasury chief, was so upset that she warned the world that failure to buy U.S. treasuries would be the ultimate disaster for the global financial system. She even mentioned China in particular, saying that even if the United States only pays a little bit of interest to China and does not pay back the principal, China should still continue to buy United States Treasury bonds. This logic is hard to understand. Borrowing money to pay back is quite basic, and the need to force the issuance of new debt for the ballooning U.S. debt has become a matter of worldwide concern. Yellen's visit to China is said to be about money. The U.S. has a lot of maturing debt that needs to be repaid, and if it can't borrow money from the rest of the world, it will be difficult for the U.S. to repay its maturing debt in a timely manner. As a result, the domestic economy will not be able to function properly, and various support and other expenses will not be honored. Without money, the United States cannot maintain its current standard of living. Although the U.S. Congress approved an increase in the debt ceiling, the U.S. government still needs people willing to borrow. If the world does not lend the United States money, the risk of the United States defaulting on its debt will increase greatly. The reality is that the U.S. is no longer able to make timely repayments, and in the meantime, Japan's maturing debt will already have failed to be repaid in a timely manner, and Japan will have to suffer in silence and pretend not to see it. Although U.S. treasuries have always been seen as the weathervane of the global financial market, China's frequent selling of U.S. treasuries and increasing its gold holdings sends negative signals to the world. After all, China is the world's leading manufacturing nation and has been the largest buyer of U.S. treasuries for years. There is more than one reason for China's frequent selling of U.S. treasuries. Even if the factor of economic restructuring is removed, the core reason is that the confrontation between China and the U.S. has reached a point where it is difficult to reconcile. The relationship between the two countries has become increasingly strained due to escalating trade frictions for political and military reasons. Against this background, China's reduction of its holdings of U.S. treasuries is tantamount to sending a very clear signal to the U.S.: let the U.S. stand on its own feet and stop relying on borrowing. Let's take a look at China's sell-off of U.S. treasuries. According to the latest data, as of the end of July, China's official holdings of U.S. Treasury bonds has fallen to $830 billion, compared with the peak 3 years ago, a reduction of $1.3 trillion. These U.S. treasuries have become an important part of China's official foreign exchange reserves. In fact, this reduction is not entirely new. As early as 2011, Chinese officials had significantly reduced their holdings of U.S. treasuries. However, the scale of this reduction is larger than ever, and the timing is also more sensitive. On the one hand, the level of U.S. debt is already very high, and therefore there are greater risks. On the other hand, trade friction between the U.S. and China continues, which in turn is causing concern across global markets. China has long been considered the largest buyer of U.S. treasuries. While this view is not entirely accurate, there is no doubt that China has been a large investor in the U.S. Treasury market over the past few years, and its holdings have been very large. Therefore, it is only natural that China has attracted the attention of the global markets when it sells off U.S. treasuries. Another very important factor is the gold market. According to data released by the World Gold Council on August 3, China imported a total of 694 tons of gold from Europe and the United States in the first 5 months of this year, which is expected to be the strongest quarterly performance since 2015. And since China did not disclose the growth of its gold reserves in November 2019 and the increase in its gold reserve holdings from November last year to the present day, more than 4,084 tons of gold have been shipped to China from Europe and the United States, the main international gold market. Based on this, according to Peter Schiff, a veteran Wall Street prophet who successfully predicted the 2008 financial crisis in the United States. Schiff explains that as more and more countries around the world are moving away from the US dollar in the energy trade, and taking into account the new trend of global central banks selling US debt for gold in the field of international reserve assets, especially in the context of the Great Reconciliation of the Middle East countries in the recent past, all these indicate that the closed-loop foundation of the oil dollar US bonds has become problematic. The structure of the dollar is in trouble. Peter Schiff further said that if the US dollar loses trust, the US Treasury Department, in order to prevent the spread of this situation, the US may use gold to China and Japan and other major buyers of US debt to pay off the US debt and interest, in order to restore credibility, because the basic law of the United States clearly stipulates that the bondholders must be paid, which indicates that the repayment of US debt is sacrosanct. This shows that it is sacrosanct for the United States to repay its debts, that it cannot violate its obligations to repay its debts and pay interest, and that it does not dare or have the right to renege on its debts, once again out of the market's expectation. What do all these actions symbolize? There are many who believe that it is Chinese officials seeking a more robust form of fixed income investment. Compared to the US government's credit rating, gold is still a more stable tool for preserving value, although it is a riskier investment. Alternatively, this is Chinese officials reflecting on decisions made since the US subprime mortgage crisis. However, it would perhaps be a mistake to see these actions only as a reorientation of China's own investment portfolio. More importantly, the message conveyed by these official Chinese actions is political. That is, it is a measure of official Chinese trust and confidence in the US political system. Indeed, that confidence has suffered a great deal of wear and tear over the past few years. Increased trade friction has made China more skeptical of the US economic and financial system. Against this backdrop, China's reduction in its holdings of US Treasuries, as well as its increased holdings of gold, can be seen as a relatively radical measure taken by Chinese officials. The essence of such measures does not lie in their economic benefits, but in the fact that they send a very strong signal to the US and global markets. China has its own choices and its own bottom line. That's why senior US government officials are very wary of this. US Secretary of the Treasury Demers Yellen said in an interview in March that she was concerned about China's increased gold holdings. She believes that this is related to the trade tensions between the United States and China, and said that people need to be made aware of the implications of these actions.